Okay.
Good morning, everybody, or good afternoon if you're from Europe or somewhere from Asia. We want to focus today on retirement account trading. I give you a lot of insights and details. I encourage you to take some notes because afterwards to go through hours of good value content will be hard. So take some notes while I present a couple of real valuable insights of what's possible in a retirement account and what you can do to achieve the results you desire. So with that said, let me jump into the disclaimer. Yeah, so here we are here as educators, not broker dealers. And the word never lost trading, don't get me wrong, it doesn't mean you never lose a trade. It comes from the idea of never stop loss trading, but that was a little bit lengthy because we repair a lot of the trades that go south. That's a big thing in trading. Look, the thing is we are working always under a certain ambiguity. We never know if everything that we assume will realize in the market that way. And that makes that profession very different because as more proficient you get over time, you're still having a high likelihood that things go one or the other way. So therefore, I encourage you today with that presentation to learn how to focus on high probability trading, how to focus on systematics, on money management, and follow a clear-cut plan. With that said, let's dive in. Yeah. The majority of the online trading account holders also have a form of a retirement account, and they barely trade it. Now, I want to show you today methods and ideas of how to trade this. What I show here for retirement accounts will definitely also work for all other type of accounts like the margin accounts, but I want to specifically focus on this because a lot of people leave a lot of opportunities aside, and I want to wake you up and I want to help you driving and striving for your desired income from where you mostly hold the most money you have. Yeah. And so the retirement accounts typically for 1K, yeah, and subversion for 3B, or you have an IRA, yeah, and there's different classifications. So we will today focus on how do I trade a 401K because I work. I have an employer that allows me to have that, or on an IRA. Contributions always vary, yeah? 19,000 you can save in a 401k in 2019, 6,000 in an IRA. Last year's numbers were $500 lower. But that's good money that you can contribute in there. It's tax sheltered. And now the idea is, how do I make more out of this, not having it sitting and just have a money manager manage it for me, yeah? I want it because the money manager is satisfied if they reach somewhere an index value. Yeah, that's not how they make money. Yeah, I can tell you how they make money, but that's not the issue of that presentation. But they focus on, like, for example, large cap, the S&P 500 or the Dow, small cap like the Russell, and so on. They always look at the index and say, okay, if I'm 2 points up or down from the index, that's good enough. That's fine. Yeah. But if you want to make a difference for your future wealth, you can beat the index. And I want to work with you. Yeah. Because they cannot. They have to trade because they have so much money in their accounts working with billions of dollars. It cannot easily move in and out. You have the advantage. You can beat the index because you have a small account. So it can be fast, precise, in and out, working on pulling entire buckets of investments into one section, taking them out again, moving it into the next. And that will be very, very helpful for you, what I show you here, because let us look at an index comparison. So you see two lines, yeah, one in the background says SPY, yeah, that's the ETF of the S&P 500, and the other one says that's Berkshire Hathaway. And when you compare the two, what do you see end of the line? I just did a 12 months comparison, yeah? And so basically, if you bought in the SPY 12 months ago, you are up 1.55%. If you bought in the Berkshire Hathaway 12 months ago, you are down 2.35 of your holdings. There's sure a difference of 3.9%, but is that what you want to strive for with your money? The thing is, when we take a little outlook here, where we are right now, economies are slowing a little bit. They're not slow, but they're slowing a little bit. And so with that, the stock market might go sideways for a while, maybe also takes a dive down. And I want you to be prepared, regardless of which account you have and with whom you want to work, for making money with your retirement money if the markets go up, if they go sideways, or if they go down. And to do so, we'll need to put a couple of things in place together and discuss about it. Yeah, so the first thing is goals. Yeah, if you have a 401k, I put out a challenge here, say, look, it would be nice if we can make it 10%, because when with the expectations of the market are not skyrocketing, we just take a perspective for the next 10 years of about 3% average growth. That's good, yeah, it contributes, but if you can make 10%, let's see what the difference will make. Or if you have an IRA, we are more challenging. On the goals, we say between 2 and 10%. 10% might be a challenge, but it also depends on the size of the account. And I'll show you why. So if we take that into consideration, how do we trade it? How do we put measures in place to strive for exceptional goals? So you see here, I took a $50,000 account and I grossed it up over 10 years with a 3% growth rate or a 10% growth rate. And the difference is substantial. I got the numbers here on the bottom. So you see more than a $60,000 difference. So what does it tell you? Education, knowledge pays off long term. Yeah. The investment that pays the highest returns is the investment in you, but you need to know how to do these things. And I want to give you the hints and the help and the support to move that forward. If you now say, okay, contribution, and I just took last year's $5,500 contribution, grossed it up, but the gap still substantial. When I say I take a 50% match, because that's what a lot of people have with a 401k plan, there you see again, there is another $90,000 of a difference between knowledge, and knowledge pays. Yeah, so how can we get there to get out of a position where we don't have to expect the average random growth and can focus on producing returns? I give you some trading examples using a system which is called NeverLossTrading. And there we look and first of all focus on an example that was from a client. Yeah, so he had a 401k plan with T. Rowe Price. As you can see here, there's also an Oppenheimer fund in it, and so we helped him to cross this, and he was heavily invested up there. Yeah, so in a large cap. So reference is S&P 500. So now let's look at the system, what it said, and how we make decisions and helping the client. Yeah, so you see here on that system, there's a red line. That's the stop line. And so that stop line got triggered last year's October. Yeah. So there the stop line got triggered. So that's from the system. Blue goes up, red goes down, blue goes up. That's, and the stop line is always sitting below. And there's buy and sell signals on this one. But here, first of all, he was long. He had no opportunity to go short, because some of you who have 401k, you have like reverse ETFs, and with that they make money when the market dives or when a sector dives. So he had no ability of such, so therefore we had him stop. Yeah, so here was the stop in October, and then we had him re-enter right off the bat in January. So how many trades did he have to do in 6 months? 2. That's not too much of a challenge. Let us now calculate together what that means. Yeah, so we had the average high at 292 SPY points. The stop level was 288. The re-entry level, which you see here on buy, was 252. And today, where I took the measure, 282 of a SPY. So what does it mean percentage-wise? Yeah, when we take the highest, the level which we want to keep, the stop was we lost 1.4%. Yeah, there we got stopped out. What does it mean on a 401k? You write your plan provider, I want to move my money to cash bank. Very easy. Yeah? And so therefore you have 98.6% of your money, while the market made all the way a dive down to 252 where we re-entered. There you would have lost 13.7% of your money. And today, if you had just stayed in the market, you would still be down 3.4%. So to prevent that, so you need to go in and out of your 401k account. You go into cash, and at 252, where the buy signal was, we go and we re-enter. We took a re-entry. So that means we are making a profit. When you add all that up, we are at 110%. So that means 10% up over the 100, or 10.4 to be mathematically precise. And we were beating the index, because you know here the happening was, as you would have been down 3.4, the difference between the two, 13.8% above the money management. Now I take a perspective for gold. Yeah, on gold, there were two instances over the last 12 months. Yeah, first of all, here on the red line, gold got stopped short. Yeah, or you had to go short. We'll do that a little later how we do this. But on the 401k, that's not possible mostly. Then there was a re-entry point here on the buy signal and the turnaround signal. And there was a stop point just recently where we fell below the red line. There it was sitting. And so in between those trades, had you just stayed in, yeah, gold at 128 was the high, stop was 125. So therefore we had 97.7% of our capital left. The re-entry was 114.5. Adding it all up, we beat the index by 9.7%, following a system that has clear-cut entries, exits, and stops. And that's required. And the entries and exits and stops here are based on algorithms that follow the money flow. Changes in supply and demand can be measured and can be projected or portrayed on a chart. And that's what we are doing here. That's the basis of making those directions. There's a lot of other information on a chart. I don't want to bother today in these 45 minutes. I want to give you the hints. You need to be prepared. Those who fail to prepare are prepared to fail in the market. And you have a lot of opportunities here to see different presenters. We give you insights and we put work into this, because I'm not holding all the time the same presentation. That's always a preparation for you, and you need to prepare with us to come into the direction to long-term make money and realize those opportunities. Basis of that little pyramid here is predictability of direction. Yeah, we need to have a system in place that at or above 65% can predict the future price happening. That's still a 35% ambiguity, but the odds are in your favor to make money. If you look at a couple of my other seminars and recordings, they're on YouTube, there I go more into the probability thinking. I don't want to do that today here. Then you need applicable strategies. You can't just have a long strategy, out here. I showed you in the matter of the 401k, there's nothing else possible than going in cash and going back in again. But in an IRA, you need to trade your account. You need to have strategies that give you opportunity on the way up, on the way down, and on sideways. And then next thing, participation rate. How many of the opportunities are you seeing? Yeah, are you finding what is moving, which sector, which stock, and how can you participate in that? And when a trade goes wrong, I'm talking about the other 35%, if you can repair it, you'll make a world of a difference. I show you a little calculation after that you make a 50% higher return if you repair your trades overall. Yeah, so that all is substantial. Take some notes. That's what you need to have. If you don't prepare for all these four sections here, you will have a high likelihood to not come out positive in trading or not come out beating the index. But that's what we want to do, because we put work and effort in it. And with the work and effort, we want to be better than the money manager who is tied to a very high investment volume. We are tied to smaller decisions, and therefore we can make that growth happen and we can work together getting us there. Yeah, and now we're going into IRA trading strategies, looking at what is possible. First of all, I want to encourage you to specify and qualify for option trading. That's needed for making the right decision and helping you to make the income you desire. Yeah, and you need to put some paperwork in to be able to do and get those things done at your broker level. Yeah, so I give you the idea here. Option strategy, first level that you need to qualify for by your paperwork is covered call writing. Very important. You make the additional income, you have a form of protection, it'll be necessary for you. Level 2, strategy for buying puts and calls. Yeah, so that you can buy a call when the market goes up, you can participate in, but in particular now with your IRA, when the market goes down, you want to be able to buy some puts to participate in a downside move, but you have to have a system that tells you when it's time for this, what is the action, and what you do. And with the options, you need to learn from somebody what strike price to buy, what time to expiration to buy, how to operate. There's a lot of different information. We are specific with the NeverLossTrading Delta Force method, where it's all clear, rule-based trading. We're not missing out. You can learn this and you can follow key principles. Then level 3, authorization that allows spreads. credit and debit spreads. Both you can do then in your risk profile, and it depends on your broker where you have your IRA with, what they specifically allow, but you need to ask them to get through those levels, because when you have that in place, then you have a much bigger chance to turn things your way. What does it mean? Yeah, I go through some growth strategies now with you, 2 different account types. Oops, that went too fast. And these strategies gonna include, first of all, you can do long stock. That's easy. Short stocks not allowed in IRA, period. Yeah, whoops. Yeah, and next strategy, I told you, covered calls. Yeah, or you do a little strangle around the stock that you hold. Then buying puts and calls, long and short. Yeah, so that means short you buy puts, long you buy calls. Yeah, then buying put and call spreads, they can be positive or negative, and I'll show you a little later what that would mean. And then you to sell them. Yeah, so all of these should be in your repertoire of trading strategies, and you need to know, based on your system and your requirements, which one to apply at the applicable moment. Now when you see, okay, what does all that tell me? Look, all of these has different return expectations. The return expectations here, do it here first for swing trade. So that means you are staying in a trade between 3 and 10 days. Yeah, and you see here always specific times we give here. So long stock, yeah, 2% return on capital or cash, what you want to say here, 3 to 5 days, same amount of risk. The repair operation, easy, reward risk, 1 to 2. So now here you see, okay, on a covered call or collar, yeah, 2% return expectation, but less risk. So, okay, that's nice. Yeah, because you know, with the additional income, you can do something. You can limit your risk. Yeah, then you buying puts and calls or spreads long. Yeah, here you have 60% return on cash opportunity, but also the same risk. Yeah, and here then you have the opportunity for making short credit spreads, yeah, because if you limit them in your account with a cap, and I can show you how that is done, then you have a nice opportunity. But here you see the sexiness in that is you have a strategy that gets you money and you have little risk into it. Yeah, so when you compare that, risk reward 5 to 1, 1.1, 2 to 1. So you see with the options, you are leveraging your ability to invest. Yeah, we don't want to over leverage on one part, but you have an opportunity to apply strategies that give you a higher probability for income at the certain point where you act. And with that, you can long-term beat the money manager and make your desirable returns. When I now do that with long-term investing strategies, we always take weekly charts. We also take monthly, but let us look here just in that session on weekly. There you see again, similar relations. That jumped ahead of me, so my mouse today is a little wild. Yeah, similar relations, but also you see different time frames. Yeah, so now we are 3 to 5 weeks in a trade, or here you say 42 days in a trade. So we have always a clear rule. Okay, what do you do? What's my action point? How do we work on it? And what can we do to repair the trade? Yeah, you see here, easy repair, solid repair potential, because if we can limit when things go wrong and when we can do it right, when they go right, we have a very different proposition to move ahead and get into the market and produce those returns. But how do we do that? Risk assessment, yeah? You always have to limit your risk of one position that you have in the market. Absolutely necessary. We work with percentage risks and we dynamically adjust it by the indication of the strengths of the directional signal that we have. And with this combination, then you will see in the next charts why a portfolio could look very, very different. So here I put a portfolio out, an IRA account, $80,000. Some of you might say it's high. The average account in the US by Fidelity is $104,000. Yeah, of IRA holdings. And I say here, let's look at an investment rate of 80%, because you know, with our trading type, we might want to have some investment when it's very beautiful or some for certain of the repairs, while most of the repair strategies we have, the cash free. Yeah. And so when you see here, so we took a portfolio of 4 positions on the swing trading, and 4 positions on the longer term investing. So they all have different expectations on the rate of return, the rate of risk, the duration in time. And with that, we did an earns turns ratio and said, okay, we were striving for 50% return on the entire account, and we are capable, if we hold that through, to do that. But you have to work for 130 trades. Is that a lot? Depending here. So if you can trade on a daily chart, those trades come from here. If you only trade on a weekly charts, they come from here. But we also can shift between these individual buckets from one to the other. You might say, why, how did you split it up like that? That was a preference of a client. And we always work with clients on individual basis teaching this, because so far we're 10 years in business, we haven't seen two of the same risk, the same holding, the same interest, the amount of time that they can dedicate to trading, because a lot of people work or have a business and just do that. And so it depends if you can trade all day or if you want to trade for an hour and 50 and 20 minutes a day. So we always put together a clear-cut portfolio with you where we see, okay, what should be achievable, but also what gets us there. And with the risk guideline, at a certain point in time, stock tradings are an imperative, while if you have a smaller portfolio, you might just focus more on the long put and call side, and with that puzzle together a portfolio. Here you see with a small account, $10,000, 8,000 invested, 65% probability to make it right. We can make 100% return, but over time when your account grows, the greater risk perspective of adding long positions in puts and calls, for example, has to get a shift towards the stock. So therefore, with all account holdings, there's a different strategy. With your time, there's a different strategy. And with your personality, your risk assessment, there's a different strategy we can puzzle together and make a business plan for trading success with you for your IRA, for your 401k, and surely also for your margin accounts. And trading and consistency, predictability. So we develop the systems, we know the strategic situations and specific strategies. We have the opportunity finders in place, helping you on multiple time frames, clear-cut entries, exit stops always from the system, and help you on a good participation rate so that you stay invested. So that you find constant opportunities when you close one, that you be able to find a new one that is on the same rate and magnitude of success as the prior one you had. Based on that, we have opportunity finders. We have a stock alert, for example, and we have a long-term alert, and I'm going to refer to that today. And with some of the systems like the NeverLossTrading top line, you have scanners and all of that in place, but always there's a key entry exit, and that's in it. And I give you a special offer for those who are interested in learning more about that. Let us take a look at the chart first. You saw from prior, these red lines are trailing stop lines, but also the buy order here gives a clear-cut exit. So it says a target, and on that target 85% of the time when that is reached, the price will either halter, reverse, or return. So what do? You take it out, but the system is telling you. On this one, for example, the yellow one, it says hold for 10 candles or a 2 SPU move. The SPU is up there in our corner, giving you an idea of how far the price move shall reach. That's a 1 SPU price move up there, and what return on cash that means. It gives you the target 1, it gives you the stop, and it gives you a relation. It says here favorable. It says, hey, you found a great setup. 2.9 to 1 is your reward risk setup. So all of this is on your dashboard when you take the trade and when you maneuver it into the right direction. And so you see also to the downside, but there's sequences that you have to learn. So, there's a sell sign. It is. But what starts in the light tower? Light towers are those with a little cyan dot in the middle, likes to end in a light tower. And exactly that happens. What's your rule? And these rules will be written down with you in your trading plan or business plan for trading success. You will leave the trade and you get ready for getting into it again. So what you see here on the chart is the development of the Apple share. And so this will be more hopefully something new to you, giving you the ability to move along at clearly defined entries, know your exits, know your stops, and you see here with your trailing stop line, yeah, the red line underneath it, that helps you where you always know if that gets triggered, I'm out, or if one of those sequences, my 2 SPU, then I'm out, or we formulate also a 10 bar or 5 bar candle rule. All of these rules, that's the basis of rule-based trading, algorithmic trading, so that you are not interpreting what you do, that you follow clear-cut rules, and with that, you can do that definitely in all your accounts. What we take here for the decision in IRA is often weekly signals here, because here you see per week, and it's substantial changes in directional income you can make along the lines with that. Yeah, so now going to the next, I make you an offer. We have a special program, yeah, the NeverLossTrading long-term investor alert. It comes out on a Saturday or Sunday, depending, because it's always based on the last Friday. Lasts for a week. There's entries, exits, stops. If you like to have that, I don't want any credit card or whatever, but a legit email. I don't want to write an email to 1234 and then we get a bad Google rating. Yeah, give me a legit email. Say report or NeverLossTrading alert, and then I'll send that alert for free to you for the next 4 weeks and hope you get some good insights out. What it does not have in the report is the strategy, yeah, because it lists where to go in and out, and it lists certain of the opportunities. Look into it. I sent you later on when you signed up a little video with it too, so that you can see how to read the market, and you will receive the first one on Saturday. Yeah, so I don't need no credit card, no credential, just a legit email address, and please give me your name. That's all I want to have. And then we can see if we can start working and getting into a relationship, because you see, working one-on-one, we work on relationships. When you look at our performance over 10 years, I don't think you found one who complained. And we are in a higher bracket of what we ask for our services because we are proven. Yeah? Odds-based position sizing is a very, very essential tool. I just want to give you some insights. Here's a Cisco calculation. You don't have to do that. You just plug in 4 numbers. All the math is done for you. It gives you in relation to your holdings a focus of how much should I invest if I trade the stock, if I trade the option. Yeah, all of that is always covered. And we need to come together from a strategy to a plan. And that's very, very essential, because only when you can follow a clear-cut written plan, you will be good at what you're doing. And it shall entail a financial plan, as you saw it basically prior. How many trades? What are my returns? Which are the strategies I apply? Because if you don't trade, you don't make the return. You need to trade. Participation rate is important. And an action plan. How do I prepare? How do I select? Which of the strategies do I apply? How does that all fit in? And we help you writing that plan. It's yours, always different. We have different kind of systems, and we'll look with you which one fits your budget and which one fits your trading style the best. Yeah, so then you will know when to trade, what to trade, how to repair the trade, and what to expect from trading in your returns. Yeah, and repair and hedge, I just want to come to that. That's where our name comes from. Yeah, so imagine you do 100 trades at 65% attainment rates. Yeah, on the left side, I calculated without repair. So you say, okay, $50 gain, you trade dollar for dollar, $35 risk or loss, $30 balance, easy. Yeah. If you do $65 gain, now you repair it, and you only make a fraction of the loss, you have a $51 balance. And when you take the one over the other, you see you have a 70% higher return. This is why we are so focused, never stop loss trading, on repairing those trades. And you can. Yeah, all the different strategies have a different repair, but we'll educate you how that can be done to obtain an above index performance in your retirement account and also in your margin account or other trading account. Yeah, our offer at that point. Yeah. We have systems in place, and we have server installed software. So we install all of that. It's not a video or something like that. We install that with you, for you. You don't have to do anything. It goes into a server. It's a free data feed for real-time data. So you don't have to break your relationships with your broker. you can keep it, you can see all your data on there, and you can make your decisions in your IRA, in your 401k, in your margin account, wherever you desire to trade. But somewhere you need to see the signals, and you need to learn on the other hand side the strategies in accordance to the signals that get you to move in the right direction. So then you have entry, exit, stop, always specified, yeah, always on the chart. You saw that in the prior dashboard. It's on top of the chart. It sits there. It tells you position sizing, yeah, the little opportunity or odd space position sizing. What do we do? Time in the trade, yeah, it's 42 days or 3 to 5 weeks, 3 to 5 days. What options do I buy? All of that will educate and work with you, and in particular risk handling, so that we don't over leverage, because that's a common mistake. Look, in 2008, when I saw some people really having hope that it doesn't go that bad, until they had to take money out. And that's not a good idea. You need to know when things turn and how to react on them, and how to have the ability of also making money when things go down. And we can show you that. And we always focus on risk handling, not over leveraging, because we want you to be in business long term as a trader and as an investor. And with that, we summarize all of that in a business plan for trading success. Yeah, we want to move you away from moving averages and all of that stuff, because it barely works. It has a bit of a positive expectation, but it's not getting over the hump. It's too past price oriented. Yeah, you see systems with MACD, RSI. If they had worked, I wouldn't have set myself down for 10,000 hours and develop all of that, because the probability is lightly positive, but it's not good enough if you put in slippage and a little flaw and no trade repairability. It will be very hard. Here's a system combination where you see on Apple what is possible here on a daily chart, where you see, okay, clear-cut ins and outs, and there you see the winning rate where we had it. So very successful over the long haul. It truly similar works on a weekly chart or on a monthly chart, but here it just gives you a demonstration where we combine two systems. The one is NeverLossTrading top line, and the other is trend catching. This is for people who frequently want to trade, and I can make you an offer on this one, helping you to get into the world of algorithmic trading, applying the right strategies, repairing your trades, and finding your trades with a high participation rate, so that you can get your money engaged and stay invested for making returns. Yeah, so our base system is called tradecolors.com. It trades on two of the same, red or blue. There's an algorithm behind it, and that system then is included in all the others. So if somebody starts out with trade colors, you always have to have the ability to upgrade later, and with the later upgrade, you only pay the difference between the systems. Yeah, but when you're serious, you go to a higher level and higher grade system from the get-go, because you want to make returns. Still, Trade Colors is a solid system. I'm going to offer it to you with 5 hours of training. Yeah. Then we have a 2-for-1 deal. That's what you just saw on the Apple chart. 2 trend catching and NeverLossTrading top line all in one. Yeah, with 10 hours of trading, and the top line is a light version because there's a couple of things not included. Or then the flagship that we really have the most engagement in, 20 hours of trading with top line. You have your own specified watch list indicators, you have your market scanners that bring you the trading opportunities you desire for you to be able to participate in the markets where prices move, and you see it from your computer. You can do the scans from your home. You be educated how to put one into the other and make decisions from. Yeah. So we work with you, and we always work individually. What does it mean? We work at your best available days and times, and we are coming together in hourly 1.5 hour sessions. It's no pressure. You take your individual steps as it fits your life, and will guide you. Always, every session is recorded, and with that you can go back with the recorded session and relearn, because they are filled with content. Why? They are not pre-prepared, they're prepared, and then we jointly work through. You have hand-holding, you have the guidance that you really need and want at the end of the day for getting things done. And when you come into the market, we're not going to leave you alone. You can always feedback with us saying, okay, this is the trade I want to do, what you think about it, what is your perspective. And we are not broker dealers, but we can definitely say, if I were you, I would see it as follows, and I would apply that in that strategy. So therefore, you see, it's going to be a full package. And with that full package, if you're interested in it, write me an email and say offer. Yeah, or call the office. Yeah, most likely you don't get me directly at 866-455-0520. And with that, we'll work together what suits you best and what is the best opportunity for you to go into the market, because these things work live. I'll just shoot in the platform here. I can make that a little bigger. Yeah, so you see here the XLK. Yeah, so that is is an example where you saw, okay, wow, here we had a double buy signal. Yeah, so and it's always the second we like best. Yeah, the first one we disregard. If in a short environment the first leg long is usually wrong. This here is a big turning signals, 2 of the orange combined with the blue to the upside. And so if you had invested in here, you had a long run all the way up going into today, basically. Yeah, but here it would have been stopped, and here was the re-entry, and there you see your 2 targets where you better take your profit and run, because there is an 85% chance that if you invested, you didn't go there and you didn't get to where you want to be. But you see here it's repetitive. Yeah, so that, and we can do that for any stock, any of the futures. We trade those too, and any of the symbols that you really want to put in. If you want to experience that live with me, yeah, and say, okay, give me a demonstration, just write me an email, say to contact at NeverLossTrading, or call the office, say, listen, I want to have a live demonstration for an hour with you, and I commit, I'll do that. Yeah, but also be serious, because you know time is valuable. I don't want to do it just for everybody who's not interested. If you're interested in learning how to work in the markets, then I'm here for you. And at that point in time, I'd like to take your questions. If I can see them here, I'll need to see if I can separate the chat. Is there anything I can answer you at that point in time? Yeah, so hope I was able to give you some insights in different perspectives, because very many people leave their retirement account alone, or even particularly the 401k, but that's not meaningful. When I had one, I stopped working in 2008. Until then, I also had a 401k plan, and I one time got from the plan administrator a letter saying, listen, you shouldn't trade that much. Yeah, right. But I was the boss anyhow, and so therefore it didn't matter to me. But secondly, what does it tell? In the 401k, you are subscribed to like a fund. Yeah, the holding of the assets, that means the stock, is with the 401k issuer. Yeah, ING, T. Rowe Price, Schwab. Yeah, so those who issue that, they are making good money by selling covered calls on their holdings. So that means you don't pay them with your 1% maintenance fee over the year. They are doing it within selling options. And when you think about it, if they get rich within selling options, you should have the ability for working with options too, because a 1% service fee a year is not going to pay all those buildings that are up there with the fund managers. Yeah, and you can beat the fund managers at the issue when you are prepared with the right system, giving you high probabilities, entries, exits, and stop. And if you are prepared with your strategies and your repair and a clear-cut plan. And that's what we are here for, and that's what we are offering. If we're coming together, that's what we do with you. And so therefore, my offer again, if you like to work live with me, and you can challenge the system, say, listen, show me this, give me an environment where things change, and I put it on the chart, and we can look how different systems perform. And yeah, sure, at the end I will ask you, is that what you want to do? And if I was able to convince you, like we did over many years, very many clients, then we're working together and getting you into the position for striving for clear-cut goals in any of your accounts, be it your retirement account, which I focused on here, be it your investment account, and also we work definitely with currencies, we work with futures. The systems are independent because they measure supply and demand changes, and so with that independently give you a clear-cut idea where there is a transition, and that's how it's measured, because you have to look more like a seismic measure before a market price move or price move of an asset. You can basically seismically focus in changes of supply and demand and trigger a potential change. And we only trade if the direction of the change, there's a spelled out threshold, only if that threshold is taken out. What does it mean for your trading? You can formulate at the comfort of the morning before the market starts a trade saying, if the stock goes above 101, I want to buy a call option and I want to pay $2 for it. All of that you will learn. You don't have to be in front of your screen. And simultaneously, you will know when that order is filled, you can already put your exit order in. When the price of the underlying moves to that and that, then I want to sell my call option, for example, or my stock at the desired price, which was specified at entry. That's a very different and comfortable way of trading with buy stop, sell stop orders, conditioned to that your price threshold is fulfilled and your system is giving you a clear-cut direction for taking the opportunity. With that said, I'm thanking you for being here. I hope I was able to give you an exciting presentation. And at that point in time, I want to give back to the moderator so that he can announce the next presenter.